You should not take advantage of the payroll tax deferral program. My name is Paul Vasquez, JD, that's how you'll find me on the YouTube. I am co-founder in the Singularity Network, president of Tax Lab and Pro Business Solutions, and inventor of the HatTac patent pending. Patent application's actually already in. But that is not why I want to talk to you guys today. What I do want to talk to you about is this payroll deferral program is kind of how it's being talked about. And I'm getting a lot of questions on social media, and that's why I wanted to kind of give you guys my thoughts, give you my skinny on it, to save you some time and headache on that yourself. But please feel free to research this information yourself. While I am an accountant and a lawyer, I am not your accountant, nor am I your lawyer. I'm nobody's lawyer. I'm not practicing law that way. But I do have a insight that some accountants might not have as to the rules, because I read them as a lawyer would, not just as an accountant might. But let's get into this. These rules came down. This memo was on August 8th, 2020, a memorandum on deferring payroll tax obligations in light of the ongoing COVID-19 disaster. So that's what this is. And I read over this real quick. It's not very big. It's very short, but I'm going to kind of break this down a little bit, hopefully a little bit easier for you guys, and kind of go through it so you can hopefully understand it a little bit better. Maybe make a decision for yourself with your professionals that you talk with according to your personal situation. It starts off, the Secretary of the Treasury hereby directs to use his authority to defer the withholding, deposit, and payment of taxes imposed with the authority that they have to take an effect on wages or compensations as applicable paid during the period of September 1st, 2020 to December 31st, 2020. So, right now there's a time limit on when you can defer your taxes, your payroll taxes. This is just federal. This is a federal ruling. It doesn't necessarily include your state or local taxes. So remember that. This is a federal thing. There are some caveats. Not everybody can participate. You might not be able to participate in deferring your payroll taxes. And deferring your payroll taxes, that's the key to understanding this. To qualify, you must be earning less than $4,000 biweekly. That's $8,000 every 2 weeks, or about a month, right? If you get biweekly payments that are $4,000 or under, or any types of payments to the equivalent thereof, most likely you would qualify then for the deferral program. Now, this, they're saying, is done without penalties, interest, or additional taxes. So they're trying to make it free and clear of any issues regarding that. However, you've got from this deferral is between these months. That means it's deferred to the end of the year without penalties and payments. We'll get into more of this. I just want you guys to understand this as best as I do, so that way you can make a good decision. The next section talks about that the Secretary of the Treasury will be the one handing out guidelines as to how this should go about. So I am not the final word on any of this. The Secretary of the Treasury is, and I am not the Secretary of the Treasury. No, I am not. No, he's not. All right, so the Secretary shall, or will, if you hear shall, you can always replace that with will to kind of colloquialize it. So will explore. So that's already in there. Will explore, including legislation to eliminate the obligation to pay the taxes deferred. So it says paid the taxes deferred. It does not say pay the taxes that are deferrable. So does that mean that forgiveness may not be available to those who did not defer? It could be. We don't know. I have a feeling it would include everybody if they do decide to make it a permanent thing, that everybody who would have qualified under that $4,000 amount would also not be obligated to those taxes. I'll go through what I think will happen in a bit. Let's keep going on this. So how would this work? If you qualified and you wanted to have it deferred, what you would need to do is go to your employer. If you're self-employed, then go to your accountant, or if you're using a program to help you, hopefully it's a program which keeps up to date on the current rules and gives you the ability to do this deferral, to do these payroll tax deferrals. However, how this seems to be running is that the employer will still be in charge of making that deposit once the deferral period has ended. So December 31st, that means they need to already have the money, possibly. I would think, if I was in the employer's position, I would make sure that before December 31st ends, that I got all that money available to send off. So what that might mean is that about that time you get that nice Christmas bonus, or about the time that Christmas rolls around, you might see a reduction in wages on that W-2. That paycheck might be reduced for the amount deferred during the rest of the months. Now it says through December 31st, so it might be the new year. It might be the beginning of the new year when you see that. So it just depends on what happens after as to when that money is going to be due back. Could your employer say, hey, I want to be ready to start to pay this back after the 31st and make sure they have that money in the pot and reduce your pay to compensate for that, because they're the ones making the deposit, not you. They have to get that money. And if you haven't been paying it during that time, you might see an automatic reduction in that last paycheck before they have to pay it back. Do you want to do that? So what should you do if you do decide to take advantage of this? Once again, my feeling is don't. If you do decide to take advantage of this, what I might do is calculate out the amount that I would normally have to pay. You're looking at, let's see, self-employment tax 15.3%, so divide that in half. So you're looking at 7%, roundish. So put aside that amount in some savings and investments, and that would be a reason to do it. Maybe you think that you can earn some extra moolah on that money before it is due. And then once that's taken out, that's kind of when you would maybe take that money and put it back into your bank account, saying, hey, this is the tax that was held, that should have been held aside, wasn't, and now I'm going to pay myself that amount because I'm going to see that get reduced in the paycheck coming in from the employer. So you kind of save that along the way. You've got it stored in a pot, and when they reduce the pay, it should be equal to, and if you've saved that well, less than what you've earned in interest. But good luck finding something safe that's only for a few months. So I don't know what kind of investment you're going to get that's secure enough to make sure you have that money back in time that makes it worth going through all that hassle. Not sure what you can find out there that's safe, that's going to give you a return to make it worth it. I just don't see it, but maybe you do. Once again, hey, I'm not in your position. That's what you're looking at as far as what you should do. If you don't do it, if you don't do it and they do decide to forgive the deferred payments, I would imagine that if you don't do it, it will be rolled into a tax refund that you might get in April. So if you don't do it, I would imagine that they're going to give that ability to all wage earners during that time who normally have those taxes withheld. I would just imagine that if they do make it permanent and it's not a deferral, that they're just going to say, hey, everybody has to pay less taxes for that period, September through December. That half of that 15.3%. Same with the It's not giving great outline. I'm not feeling strongly about how it's worded as to whether or not this applies to the employers as well and how much. So employers beware that we might not, if you have any people who you collect taxes for, you might not see that. I only collect taxes for myself right now, but yeah, be aware. So I think it's a good program overall if in fact it is forgiven, because less taxes is better taxes, in my opinion. That's my opinion. You can read me out about that, but as my first degree, of course, was in economics, so I have studied a little bit about it. Supply, demand, deadweight loss, all that fun stuff that you get into understanding how taxes actually affect things and why many on the more economic side of things have a tendency to want free market solutions or economic solutions to some of these problems so we don't find deadweight loss in taxation. Of course, sometimes you want that deadweight loss, but that's a different story for a different time. That's a quick rundown for you guys on that. If you do decide to take that money out and save it and invest it, there are tools out there that can help you. Once again, it's for your situation. 3 tools I use is 1, Robinhood. You see my face, right? 1 is Robinhood, and you can find links in the description below on that little referral link for you. Robinhood is great for those things that you want quick liquid access to, that you feel good about putting into the stock market. 2 is M1 Finance. M1 Finance, I think, is a much better tool. While you can trade in the market there, I think it's a much better tool because of their program, to their robo-investing program, to use their Roth program, their Roth IRA. I think that's great for long-term investing. And then M1 Finance, Webull. All these links are in the description. Webull would be good. If you think that you can somehow make a better return, that'd be worth the risk, you can go ahead into Webull and use their paper trading, their kind of monopoly money, to pretend to trade in the stock market and learn that way. So 3 tools that you can use if you do decide to invest. Links are down below. Once again, we're in interesting times, but as always, save strong.